Hello, hello, everybody. Hello, this is Demetrius Curry. I hope everybody is well today. It is Financial Awareness Day, guys. Ooh, are you guys excited about learning some things about financial awareness? So, I want to come by today and talk to you guys about a few things. As a matter of fact, let me grab that real quick, pull something together for you, real quick. All right, that'd be good. Yeah, so we wanted to talk to you guys today about a few things of Financial Awareness Day, and we wanted to check your temperature. Have you guys ever, like gone to the doctor and had them check your temperature and see if everything's okay, check your vitals, see if your blood pressure is good. Maybe you have type 1 or type 2 diabetes and you wanted to check and see how things are going. Well, here's an opportunity. There's an opportunity for you to look at how you're doing and get an idea of if you're in the right space on your financial health. Let's look and see how you're doing in your health, just like you check with your regular income, and you check with your how you're feeling and your headaches and your blood pressure, and you're trying to keep your cholesterol down and things like that. Same difference, right, when it comes to looking at your financials. And so you want to look and see how your vitals are doing. So I want to give you guys some key points. I want to give you a few things to look at. I made some notes here of just a few areas that I definitely want to share with you. And one of the things I want to ask you guys is this. Are you looking at your rates on your, come on in. Are you looking at your rates on your savings and your checking accounts? Okay, your rates on your checking and savings account. This is what I'm going to challenge you guys to do this week as we're talking about Financial Awareness Day. I'm going to challenge you guys. We got Miss Charlotte Willis here with us. She is coming in, joining us, right? But I want to challenge you guys on a few things. I want you to check your checking and savings accounts. Go to your bank or maybe your online account, and I want you to see what is the rate that they're paying you on your checking and your savings accounts. Now, if you have a traditional savings or even a money market account, checking account or savings account, I want you to look and see what that rate is. And then if it's below 3%, if you're receiving less than 3% on that, can you do better? One thing I always tell people is that it's amazing to be with your banking institution for a long period of time. I have institutions that I've been with since 1996, right? That's a long time, right? Yeah, 1996, right? I've been with one of my institutions since then. But I'm not married to any banking institution. And I encourage you to check and see if the institution that you're currently with is paying you at least some decent rates, right? So I want you to check and see if you have at least 3% that's coming back to you on at least your savings account, right? If you do not, I want you guys to Google this particular information right here. It is called the high interest yield savings account, and then type in 2025, as this is the year that we're in currently. So high interest yield savings account. And whether you see this video next year or the year after, you still do the exact same thing. The information will come up for current year. Now, look and see what the rates are that you can get for maybe a company that you recognize. It may be someone like a Barclays or a American Express or a Capital One or any of these other ones, Goldman Sachs. All of them are out there for a high interest yield savings accounts. Look and see what you have. And if you're not making at least 3% at your current location, I'm going to encourage you to start thinking about making money on your money as it's sitting there. Don't that make sense to you, Charlotte?
It makes a lot of sense.
While your money is sitting there, we want to make sure that you are making some money on your savings account. Why is this important, guys? This is important because where we are currently in this economic climate is that, things have all gone up. The cost for your living expenses, the cost for, your gas and your utilities, even the groceries are still a little high, right? So as those things are going up, your money that you're making is still the same. Your rate of income and how much you get paid per hour, possibly your salary, unless they change on an annual basis with your reviews and things like that, then typically you're dealing with the same kind of money on a day-to-day basis. Okay. Well, if the cost is going up sporadically throughout the year, then it means your dollar is not stretching as far as it used to. Okay. So what we're trying to tell you to do now is that, listen, to better yourself and put yourself in a better financial position, you definitely want to make sure that you are doing what you want to make sure your money that is sitting there is making money for you. So that's number one. That's the number one thing we want to talk to you guys about. Number two, let's talk about your life insurance. When does your life insurance expire? I want you guys to pull your deck pages and your summary sheets from your life insurance policy and verify when the expiration date is on that policy. Okay. The expiration date, it can be what? Term policies of 10, 20, 30 years, right? Sometimes a little bit longer. But you also may have a whole life policy, or you may have an index universal life policy, right? If that's the case, you want to check and see that it's going to be in there for a long time. How many years is going to be there, right? Why are we doing this? Because if you're doing your life insurance and you want to make sure that you're leaving enough behind to maybe a spouse or to your kids to take care of your assets or to take care of anything that they may need in that household, you want to make sure it doesn't expire and it catches you off guard and you're surprised that it's no longer in place. We've had clients come in the last couple months that said, hey, I thought this policy was a whole life. I got 5 years left on it. I need to add on something to it. Or they think, hey, I thought this was more death benefit than what it is, and we've gotten more assets since then, and it's not going to be enough to cover my house and leave some money behind to my new children. Now I got a grandbaby and all these things that you didn't have before when you got that policy 20 years ago. Okay, so we want to encourage you to go ahead and look at that page and see if it is expiring anytime soon, and if it is, then we can help you evaluate getting a new coverage, a new account, and adding on to what you currently have. And then one of the areas, and I want to bring Miss Charnette in on this. Charnette, come on over. I want to bring you in on this because we want to talk about the third thing. And the third thing is we're talking about the estate plans, right? And how that would actually help and work, right? So who gets your assets? Number three, who gets your assets if you were to pass away? And a lot of times we get the answer, well, my kids get it, or my spouse is going to get it. All right. So this is one of my favorite little signs right here. It says documented or it didn't happen.
That's right.
Documented or it didn't happen. And I know that sounds really weird, guys, but it's a true thing. It's a true thing. So who gets your assets in the event that you passed yesterday? Okay. Now let's bring that down. Let's get even deeper with that. Let's talk about these savings accounts, Ms. Charnette. So you and I were talking about how, clients, sometimes they have their savings accounts or their checking accounts only in their name, right? But they do have someone in mind to actually leave that to in the event of. They know they wanted to leave to a spouse, or they know they want to leave it to children. But what do you say if someone is sitting before you and say, well, I have a savings or checking account, but I don't have a will or anything like that. I just want to make sure my kids get it. What kind of advice would you give them on that?
You have to have a POD.
Mm-hmm.
You have to have something on there stating that what you want to happen.
Yeah.
It doesn't just automatically roll over to that person.
Exactly. It doesn't just automatically roll over, even if the banking institution know that's your daughter, or you got a long history with the loan officers and they know who your family is. It doesn't necessarily happen immediately like that. What you want to do is you want to go into your bank and you want to tell them you want to fill out a payable on death. It's called a POD. You want to make sure they have a payable on death to add to your checking accounts and to your savings accounts or any accounts that you have with them, including if you have safety deposit boxes. Some people still have safety deposit boxes these days, but if you have that, you want to make sure there's a beneficiary listed on there called a POD. What does that do? Well, a POD, which is meant for checking and savings accounts and those type of accounts to use, it means that that particular person is first in line to get the balance of what you left behind and not go to probate. It is a form of beneficiary is what it is. It is a form of beneficiary. So you want to make sure they have that, okay? So if you have a spouse and you don't want them on your checking account because you know they're going to come in and take money that you ain't tell them they can take, okay? This is a great way to say, hey, I don't want them on there as a joint, but I do want to list them as a payable on death beneficiary in the event that I was to pass, okay?
Or even having them as a power of attorney if you were incapacitated.
Exactly. So on the power of attorney, what she's talking about is that in the event you were to get sick or if you're being incapacitated and you need someone to go to your accounts at your banking institution or possibly any accounts that you may hold, financial accounts, and you need them to carry out some wishes that you have while you're still living. While you're still living, you're just not able to do it yourself. For instance, if you have someone that you need to pay your mortgage and you write a check for it, or your utilities and you want them to write a check for it, or anything like that, and they got power of attorney to do that for you, only in the event that you're unable to do it for yourself, then that's what she's speaking of, to also have that power of attorney, financial power of attorney, or health power of attorney, okay, to speak for you while you're living in the event that you cannot speak for yourself, okay? These are the 1, 2s, and 3s of making sure that you're getting your financial temperature checked in order. So we're just sitting here talking about getting a little checkup. Do a little checkup on yourself, right? Do a checkup on yourself. Just like when you go to the doctors and you're checking your health, this is a great way to just check on yourself a little bit and see if you got those things in order. But here's a few other things that we also want to talk about. We just mentioned it. Do you have your medical directives? Now, the medical directives basically tells your family what do you want to happen in the event that you are hospitalized or you put into a situation where you can't speak for yourself in the hospital, okay? The medical directives is important, guys. It is important because if they do not know who your medical power of attorney is, then a lot of times the hospitals, they have to abide by what the hospital policy is, okay? What their rules and regulations are, what has been set in stone for their institution. Now, if you have your medical directives, and we create those with your trust and your power of attorneys, we put all that together in a package. But if you already don't have your medical directives ready, let's start putting that into place and saying, this is what I want. I don't want to be resuscitated. I don't want to be on, CPR. I don't want any of that. I don't want my organs to be, taken or anything. I don't want to do an organ donation. These are the kind of things that you put on there. So people will know that you do not want certain things to happen in the event that you cannot speak for yourself. Okay. This is part of that financial checkup, because you don't want to be in a position where someone does something medically and you really didn't want that to happen, but that your family is there attempting to speak for you, but medically they can't really lock it in stone because they don't have a medical power of attorney to speak for you.
And they're not going to give you a lot of information because of HIPAA laws.
Exactly.
If you don't have the right documentation, there's only a certain amount of information that they can give you.
You're absolutely right. You're absolutely right. And it puts your family, your children, your siblings, possibly, even your mother, okay, in a position where, you're not under the age of 18. So now that you're legal, they can't just say, hey, this is what she would want. And this is what they take it into account, and they do what they can. But if you don't have a medical directive or a paperwork, what I like to call the 4 corners of the contract, if you don't have that 4 corners of the contract to speak for yourself and say, this is what I want without any question, then a lot of times they have to go with the rules and regulations of the institution and try their best to do what they can to abide by the family's wishes. So why even put yourself in that position? As part of your financial awareness and as part of trying to make sure you're doing your checkup on yourself, okay? Doing your checkup on yourself. Then you want to make sure that you have that included in your vital checkup. Okay, what we're talking about? We're talking about Financial Awareness Day. This is National Financial Awareness Day. We wanted to give you some key points, some key areas that's really important to just do some checkups. So number one, we're checking what? We are checking to see what your interest rate is or what your rate of return is on your checking and savings accounts. If you are not making at least 3% on your savings account, what are we doing? We're going to look up there. There you go.
High interest savings account.
There you go. High interest yield savings account. Exactly. So if you're not making at least 3% or greater on your savings, I want you to go ahead and Google high interest yield savings account and then put the year behind it with this year's 2025 and see what that list is of institutions that are paying more than 3% return on your savings. We're doing that, and I'm asking you guys to do this as a favor to yourselves, because a lot of times people have money sitting in their accounts because they've been with the institution forever. They love this company. They've been with their credit union forever. They've been with their bank forever, and it's just what they know. But if there's institutions out there that you recognize, Fortune 500 companies that you recognize that are offering higher interest return on your savings, take advantage of it. This is where you get that deposit on a month-to-month basis, 3 to 5%. I have one at 4.5, 4.7 now. My savings is up to 4.5%. When you have those particular liquid savings that you need to be able to get back into as an emergency fund, you want those savings to be making some money for you while they're sitting there. Okay. All right. This is just free nuggets, y'all. This is free nuggets. This is just free nuggets to help you today that can help you make sure you're making some money on top of your money. Okay. So that's what number one. That was number one. The one thing we wanted to talk about. And then number two, what else did we talk about? We talked about checking your expiration dates on your life insurance. I'm doing a quick summary here. Checking your life insurance expiration dates to make sure that your life insurance is not expiring anytime soon. Okay.
And to piggyback on that just a little bit, there are a lot of different options for life insurance as well.
Go ahead. You got the floor.
There are so many different options. And so that's why it would be a good idea to see what you have and see if it's working for you, see how it's, serving your family. Because there are times where people are actually using life insurance as living benefits, not just death benefits, but they're living benefits as well. So that's something you definitely want to check on. Yes.
And those living benefits are so important in a life insurance policy, because if you get a major diagnosis of any kind, you're talking about having a heart attack or having a stroke or renal failure or, anything like that, ALS or Parkinson's disease, any of those things, cancer, any of those things that you could be diagnosed with, if your policy has those features into it, and a lot of times, depends on what company it is, those features can be free without an extra charge. Now, there are some that charge for it, but there are others that have it built into their base policy. And so those extra features of the living benefits is amazing to have, because I'm telling you, I have clients every day that say, hey, I was recently diagnosed with this, or I've always had great health, but all of a sudden they got me diagnosed with this and that. Then we look at their policies to see if it's going to be looked at as a critical illness, a chronic illness, or a terminal illness. And if it's going to be in one of those three categories of whatever their diagnosis is, we can pick up the phone, call the insurance company, tell them, hey, this is insurance agent, capital advisor, Demetrius Curry. I'm calling in behalf of blah, 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 blah. And they've recently been diagnosed with stage 2 cancer, Parkinson's disease, type 1 diabetes, and they have this coverage on their life insurance that we wrote for them. And we need to see how much money we can pull off the policy today to help them with their co-pays, with their medical expenses, with their living, with them coming off of work. I need to know how much money we can pull off. Is it 30%, 60%, or 100%? Right? All you understand? Stress strong. That's real good benefits built into it. See how you done got me started? We weren't even talking about this. We weren't even talking about this. But she didn't start talking about the living benefits, and she knows it's one of my favorite things to talk about. But yeah, that's really part of checking your temperature.
To see how those policies are working.
Yes, let's check those temperatures, guys. Let's check your vitals. Let's see if your portfolio of taking care of you is intact. And you're paying, this is the thing. This is what I want you guys to understand. When you're getting these policies, right? And no matter who you're using, whether we're your agent or not, these are the type of things I want you to be asking for. I want you to ask for, hey, how do I make sure I have living benefits built into my policy so that if I get sick and I was not to die and I was to have a heart attack and still be kicking, but I can't go to work anymore, how can I get some of the cash off of my coverage to help me while I'm recovering? Or to help me while I am still, trying to get back to my norm, right? Or one day go back to work. Maybe I'm not going to be off work forever, but maybe I need a year or so of just straight rehab to get myself together. Do I have the benefits built into my life insurance policy that I can take off in lump sum and help me live off of during that time frame? Okay, until I'm able to get back to work. That is important. And so I'm glad that you mentioned that, because that is truly important. And so when you're looking at, we're doing the checkpoints. This is financial literacy time. Listen, guys, we're more than halfway through the year, right? We're more than halfway through the year. I don't want you guys to be waiting to the beginning of the year talking about, I'm gonna do it at the beginning of the year. It's gonna be New Year's resolution. Not everybody's make it to New Year's. I'm just being honest with you. So we got to make sure that we put these things in place intact, right, for our families when we get the opportunity to. Okay. So anyway, that was one of the things that I want to go over with you. Now we did the checking on your checking and savings account, 3% or better. We also looked at the number 2, what you said, to check on your life insurance, make sure it's not expiring anytime soon. And then the golden rule for the life insurance is that you want to try to do at least 7 to 10 times the amount. Okay, 7 to 10 times the amount of what your annual income is, right? So if you're making $100,000 a year, then you want to try to get anywhere between $700,000 to $1 million in coverage. That's just a general rule. And why do you do that? Because let's say that you have a family that you're leaving behind and they depend on your income. So if you're doing 7 to 10 years, that gives them 7 to 10 years of income. If they keep their living the same way they always been doing it, right? That gives them 7 to 10 years of income to still be able to live off of without changing their lifestyle. Otherwise, they have the option of downgrading where they live, and you know what I'm saying, and losing everything, selling off some stuff, whatever it takes, But if your concern is you want to make sure, especially if you got young children, if you got a spouse and you end up, passing, and you got young kids and you got a spouse behind, and you want to make sure they still live the way that you set them up to live while you were still here, then you want to look at a 7 to 10 year, amount of insurance to leave behind to them, right? So, all right. So we touched on the 1, the 2, the 3, and then number 4. Here we are. Last thing. Are you choosing to go to probate?
Probate is a choice.
Probate is a choice.
Not have to go to probate.
Yeah. And we're asking you that question because when you decide on what you want to do with your estate planning, and when you want to, even your rental properties, let me talk to my landlords for a second. So if I'm talking to my landlords, and my landlords have their own LLC and they have their own S corps, right? Now they have rental properties that they have tenants in. Now they do have a business. This is their sole business. They have all these tenants paying them an income. What happens to those rental properties in your business In the event that you, the owner, CEO, VP, president, whatever your name is within your business, what happens to your rental properties if you are the sole owner or the single member owner of your LLC? Or if if you have even if you have a parent or have a parent that's involved, or maybe a sibling that's a business owner within that LLC, a lot of times families do it together, right? What happens in that case? Do you have that written inside of your paperwork, right? In your operating agreement, in your bylaws, that who actually receives this property in the event that you were to pass, and if those shares are to be divided up evenly amongst those people. Okay. But let's say that you're by yourself. Let's say that you don't have no partners in your LLC or your S Corp, and you have these rental properties as a landlord in your name. Who gets those properties in the event that you were to pass yesterday? Do you have them listed under a trust for your business? Do you have them listed under the umbrella of any protections at all in the event something was to happen to you? How do you ensure that those assets that you've built passes to your loved ones without having to go to probate? Have you thought about that? This is part of your checkup. Okay? This is part of your checkup. Let's say that it is your personal home, Ms. Charnette. You are the owner of your home, and you have a daughter that's in college, and you were to pass. Okay? You're the only person to own the property. You finance the house. The mortgage is in your name. Okay? What happens to that house? She's not listed on the deed. She's not listed as a beneficiary. You don't have a real estate deed for your property, because that's a whole nother type of deed, right there. What do you do to ensure that that property does not go to probate before it gets to your child? What do?
You got to document it.
You got to document.
You got to have a.
These kind of things have to be documented. Yes. So you exactly. You said it. You said the nail on the head. You have to have a living revocable trust.
I'll give you one more real quick.
Okay.
What if you have children that are very irresponsible, and you worked hard all of your life? You worked hard all your life, and you built this. You've done very well. You got IRAs, 401ks, and lands, and cars, and businesses, and you've done very well.
Okay.
Are you just going to just hand them all your stuff and just say, here? You might have them down as beneficiaries, but if you take control, or if you just send it on a probate, somebody else will decide what happens with it.
Well, do I want anybody else to decide what to do with my assets?
I would hope not.
So that's a question. Listen, now you got me hooked. So listen, that's a question. Do you want someone else to decide what to do with your assets? I'm gonna be quiet and let y'all answer that question. That's a good question. Do you really want someone else to decide what to do with your assets? Have you thought about that, guys? Because essentially, when you decide not to do anything, you've basically decided that they have the right to do whatever. Did you know that? No decision is a decision. I sort of tell my clients that all the time. I said, we can talk about this over and over again, however you want to. I know we can laugh, talk, joke. I am here. We good. I know, decide whatever you want to do. I'm supporting you. But whatever you decide to do or not decide to do, you are making a decision. So the decision is, do you want someone else to tell your family what portion they can and cannot have? Do you want to allow someone else to contest your will and say, no, I know what she have on paper, but she owed me this, or I believe I'm entitled to that. And the courts are going to say, guess what? We have to listen to who is being contesting the will. We have to look and see if their contestment does make sense. Do they have any supporting documents to say that they're contesting the will for a reason? And if they allow them to contest the will, the judge has to listen to it. He's not going to ignore these people that's contesting your will. He has to do it. He has to look at it and see if it's a viable request. And if it is, he's going to make his decision of what happens with your assets. And then the rest of whatever you have in your will is to be divided divide it up amongst whoever you had listed that you wanted it to be, like your children, your spouse, and things like that, things that's in your current name. All those things are sort of looked at once it goes through. But my question to you is this: have you thought about whether you want someone else to make the decision for you, or would you like to make a decision on your own about your own assets? And you made a really good point there, Charnette, when you said, but that's a good question. You have worked hard all your life. You've worked hard all your life. You've retired after 30 years with a particular company. You've gotten IRAs. You paid off your home. You debt free. You've done well. You know what I mean? You've done well. You've put yourself in a position where you can leave something tangibly to your children. Now, that's only part one.
Which is biblically sound.
That's right.
It says a good man leaves an inheritance
to his children. There you go.
For those children, they didn't stray away. They're going to come back, but they didn't stray away for a minute.
So what do you do when you have children that have strayed away and you want to leave them something, but you're afraid that they're going to either just spend it all in one place, or
it's going to be set up for when they come back. But you have the opportunity to set it up for when they come back.
Yeah,
they might stray, but when they stray, they can be out there. But they know if they come back that you got something waiting for them. Certain things that they got to do, you still have that option to set it up that way.
So how do you set up that way where what you want to happen happens? For instance, let's say we have a grandmother that is leaving money behind to the children, and she wants to make sure that a part of what she leaves behind goes to the grandchildren.
You gotta document it. You gotta document it. I'm being silly, but this is for real.
I
mean, that is so for real.
I know.
Like you said, if
it's not documented, it didn't happen. At least that's the way legally.
Yeah.
Legally, if you don't document it, it didn't happen. So that you're absolutely right. So the point I'm making here is that not only do you put it in a will, but you also protect that will with the overcovering trust. And the reason why you do the revocable living trust over the will is so that you can, if you don't really need to go to probate, there's really no reason to go to probate. You can actually put the trust over the will, and we do both, just to have a backup of layering of protections. We do layering of protections, and that's really important to us, to make sure you have layers of protections. But when you do that, you want to make sure that in the trust you can specifically say, and I mean detail for detail, this money is to be released on this person's 25th birthday, or is to be divided up over a period of 10 years at this particular amount. Or they're to get these funds in the event that they go to grad school, or even if the grandchildren gets to a certain age. And it also, when you put it into a trust, it also protects against what? It protects against those divorce,
yes,
bankruptcy,
and lawsuits.
Mm-hmm. So that way, if your child who maybe strayed away, or maybe they're in a relationship that you ain't too keen on, and you know that you don't really like that man or woman.
What's supposed to be a man or woman?
You don't really like whoever they married to,
right?
And you don't think that's gonna work out, and you're afraid to leave them anything because of this. That's another reason to create that layer up there for that living revocable trust, so that it goes to your bloodline. And not whoever they're actually in a relationship with. So a lot to consider. A lot to consider. So look, we're supposed to be gone a long time ago.
That's the way to do it. And we're just letting you know we're here. That's what we do.
Exactly.
And I've just been working with Dee for a little while with this, and I've learned so much.
Oh, you're so sweet.
And it's amazing of I guess the benefit that you have to be able to do these things. I knew about trust, and I knew about these things. I heard about them, but I didn't really know about them. And to hear about them and know it's just totally different. So it would be it'd be wise to come and talk to us and get more information so that you can protect everything that you work hard for.
Yeah. Absolutely.
It's really good.
Absolutely. Thank you for that. But today, guys, I want to also really just give you some free nuggets. Truly, that's really what we're here for today. Is as we're having conversations, we're getting ready to meet with a church family in a few moments of bringing this to their entire church family. The pastor reached out and said, "Hey, we would love to have this for our entire church family." So we're getting ready to meet with the pastor and pastor wife in a few moments. But before we do that, I wanted to come by and mention this to you of some nuggets that can help you start checking your own financial health. All right, check your vitals. Make sure your blood pressure is good. Let's make sure that your organs are operating properly, and that's all parts of your portfolio here. Make sure your checking and savings is paying you. You need something paying you while you're sleeping. Okay, so if you didn't get a chance to see this entire video, go back and rewind and listen to the nuggets we gave you about your checking and savings, the life insurance, also talking about your probate, whether you are fit for probate or if it's something that you choose to do. Probate is actually a choice. So we're not downing anyone that decided they want to go ahead and go probate and they're okay with that. That's absolutely fine. It is a choice and it is there for a reason. So probate is not a bad thing. Let's be clear. Probate is not a bad thing. It's for those people that do not have the opportunity or the chance to actually put things in place. So it has a purpose. It has a purpose. But for those people that have the time, have the opportunity to put things in place, and then mindfully they want to make sure that their family gets 100% of what they leave behind, then you are the target audience that need to be looking at your assets and seeing if you are over the probate threshold, no matter where you are in the United States. Okay, so we wanted to just come by and give you some key points on this financial awareness day. Yeah.
And don't think that you don't have enough. At least find out.
Yeah.
We hear people like, I ain't got enough to put in. But if you are over a certain dollar amount, which is not that high.
Yeah. It varies from state to state. The threshold varies from state to state. You over the $37,000 range here in Alabama, we need to talk to you. But if it's over, 50,000 in some states, 75 in other, 25 in others, it just really depends on what state you are. So that's one thing you can also check. You can Google your state and say, hey, what is the threshold to be, qualified for probate in your state? Okay, so that's a whole nother thing. But guess what? We cover all 50 states. So not a problem. Wherever you are, we can assist and help. And our team actually covers all 50 states. So that's not even the issue. If that's a question for you, when you set up your free appointment with us, and we'll put the link below, then you'll be able to, find out if you are fit for probate. Okay, so that's just one of the 3 major things that we want to bring by you today. We hope you guys have an amazing day. Thank you for spending some time with us here at Inspire for Greatness, Miss Charlotte Willis.
Thank you.
And Demetrius Curry, guys. We will talk to you soon. All right, let's get this thing together. Let's get this fitness together. Okay, all right, bye-bye.
Be simple.